All right. Welcome to the Trading Den. This is a podcast and show where we talk about trading, investing, and all things money. I am joined here today with Mr. Aryan. Aryan, how you doing?
I'm doing good. How are you?
I'm doing well. So this is actually a show that we've been trying to get going for a couple runs through already. I think that we finally got the right setup to make it happen. Aryan is a very interesting character in this space when talking about trading and investing because he is very young. Last time we talked, you were 17. Are you 18 now?
I'm 18 now.
Okay, you're 18 now.
Legally able to trade. It's only been like 1 month since I've been legally able to trade.
Okay, well we won't press you too hard on that. But Aryan, what makes Aryan so unique is that he's been trading for 5 years now?
So I started when I was 13 or 14. I don't know the exact age because I know I got my brokerage account for my 13th or 14th birthday. And then I've just been trading and investing for that period of time. So about 4 or 5 years.
That's so crazy to me. So he started young at the age of 13 or 14. And what do you primarily trade? What market?
The options market.
Okay, so you're an options trader.
Yeah.
Awesome. And so what got you first off, what got you interested in trading and investing? And then what brought you into the options market of all markets?
So trading in general, I've always been super interested in money. Mm-hmm. So I like to say that I got into the stock market because of the game Grand Theft Auto 5. So they have this stock market simulator in the game. So one day I was just, following some insider trader information and I put like my entire net worth into this one company because of some shady stockbroker who told me to do it, right? And then the next day I just saw so much money just flood into my account.
Yeah.
So then after that I was like, okay, I got to do this in real life. And obviously insider trading is illegal.
Right.
So I can't do that. So I went to like actually learning how to trade and how to do it for real legit.
Awesome.
So that's how I started. That's how I actually got interested in investing and trading. But specifically with options, I think it's just there's this one person that I used to I still look up to a lot. His name is Umar Ashraf.
Okay.
And he's the person that really got me into trading options. So He's a huge options trader. He's really consistent. He's great at what he does. He's amazing. Like he's better than me. I mean, I hope I can get to that level someday, but he's really, really inspirational as well. So I think that really pulled me into the options market, if that makes sense.
Yeah, totally. That does make sense. Is this a personal mentor or who is Umar?
Oh, no. He's a big shot. He's not a personal mentor. I wish he was a personal mentor. That would have been great.
And so you found him on YouTube, I assume?
On Instagram, actually. So I was just looking up like options trading and I came across one of his P&Ls and I think there's this one trade that really, really sold me on Umar himself. It's on BPTH. It's some Biopath pharmaceutical. Mm-hmm. And the stock went from $5 to $70 and I saw his P&L from it. It was nuts.
Yeah, especially if you're using options to lever up.
But actually, he was using shares on that, so it wasn't options because options weren't on this. They didn't have.
Wasn't
options
optionable.
It wasn't optionable. Yeah.
I see. Very interesting.
Right.
So we got to give it up first and foremost to Grand Theft Auto for the inspiration.
Exactly.
Thank you, Rockstar Games, for creating a young trader, and then also Umar for inspiring you and kind of giving you a mentor to look after, even though he wasn't a personal mentor.
Yeah.
So this is kind of the interesting thing about trading and investing in the modern era is that, back in the day, really the only way that you could get into trading is to work for a firm or hedge fund or have a personal mentor. But nowadays with social media, obviously we can find people to follow if they are legit. And I guess that's kind of the other side of it, which could be a little difficult because there are a lot of Shylocks out there in this space. How was it that you found Umar, and why did you gravitate towards him versus other options traders?
So I think it's just the timing of when I found the people that I looked up to. I think what you're referring to is all the trading gurus that came about the 2020 COVID crash. And I'm pretty sure there's a statistic that 15% of all retail traders right now came from or started trading because of the 2020 COVID crash. So that's what really pulled a lot of people in, and that's when they thought like, oh my God, because of this entire bull market, I can be an incredibly profitable trader, and that's how they started selling their signals and all of that stuff. But I kind of like discovered Umar, or I kind of like got into trading before all of that mess.
Awesome.
So, and the thing is that I wasn't really looking for someone who wasn't a scam. I was just looking for someone in general, and Umar just happened to be the first person I fell upon.
Cool. So it just sounds like it was kind of fated in the stars a little bit.
Yeah,
and that's another thing that I was going to comment on is that 2020 bull run cycle when, the Fed was, creating all this liquidity and it was getting pumped into the markets. Well, you had a lot of, traders come out of that era, and I'm just curious about how they're doing now. It's everyone's a genius when the markets are going up.
Right.
But when the markets take a turn, how many of them know how to play the market?
There's this one guy. I'm not going to throw any names out there, no shade, but there's this one guy I saw on Twitter during this entire 2020 mess, and he was on TikTok actually, and constantly promoted himself as like the most consistent trader there is on the planet. But the thing is that you scroll down, he's been trading since like March 2020, and it's been like it's May.
So he's just been smashing the buy button.
And here's the thing, I joined his Discord a couple months ago, and I've just been scrolling through his plays, minus 50%. It's terrible. He has no risk management. He doesn't know what he's doing, and it's just funny to see like all these people are suffering now because of the fact that like we had this entire bull. You can't blame them. Right, because they learned in an era or in a period where it was super easy to trade. You could buy calls one day and sell it the next day, repeat that same process every single day for 3 months, and you would make a fortune.
Right.
But now if you do that, obviously you're going to blow your fortune.
Yeah, and so that's kind of the issue here is that you had a lot of traders entering into these markets. They were thinking that trading is an easy thing. Well, you touched on it. You just mentioned it briefly. You said that they don't have any risk management, and in my opinion, that's really what separates a real trader from a fake trader, is that the ones that are going to last have risk management. And so was that something that you had to learn over time too with your trading?
It came eventually.
Yeah.
In the beginning, I was just like those people who just started trading. I mean, I would take my entire account and go all in on calls or puts, or all in on one position size, and that destroyed my account, but also taught me everything I needed to know about risk management. So it just came over time, and it took a while for me to realize that, like maybe a year, 2 years, because I was just constantly, I would be making money and then blowing it the next week, making money, blowing it the next week, because of the risk management strategy that I had.
Totally.
So I just learned that over time, and after many blown accounts, I think that's how I was able to get my risk management strategy pretty solidified.
Yeah, so you actually didn't start off as a profitable trader.
I don't think anyone does.
No.
No,
and so
no one does.
In your personal experience, how long did it take you to like at least get to flat? Because in my personal experience, this is kind of how the trading process or the trading journey works, is that you start off and maybe you have some good trades, but you have no risk management.
Yeah.
So eventually you hit these big hits. You get big ups, big downs, but then you take a few big downs in a row, your account is done.
Yeah.
After that, you start to learn, how to manage risk. You stop trying to just hit all these home runs, and you start learning how to maybe, manage your emotions, be more methodical, take profits, and take small losses. And maybe at that point you get to like flat,
right?
And then after the flat is then when you start seeing, the account climb a little bit. How long did that take you to, get to the flat stage if you went through that, and then start, eventually being consistently profitable?
I think it took 1 year, because for me, it wasn't just, an entire drop in my account. It would be like a gradual decrease, right? So I think the entire process of me making and losing money, but not even being consistent, like just being randomized, I think that took 1 year, like a year. It was a year process until I realized that, okay, this is definitely not working. And at that point, a lot of other people realize that what they're doing right now is not working, so they just quit. They quit when they're low. Totally. At their low point, and they never take the next steps of learning how to actually do it properly.
Exactly. Yeah, I think a lot of people, get discouraged. I think the statistic, and I assume it's actually probably higher, is that over time, 90% of all retail traders lose money.
Yeah.
And so, and that's net money, over time. And I think that's really due to a lot of them quitting once they hit that.
That's why I'm not really too much of a fan of that statistic itself, because you have to be I feel like you should only really comparing people who stuck with it over time. Like those are actual retail traders. But if people, quit when they're at their low point, obviously they're going to be losing money. Everyone loses money when they first start out.
Yes.
Right? But so that statistic itself is kind of like not too much of a fan of it, but it definitely is true. Most people do lose money within their first couple months of trading.
Totally. And so I think that really what it boils down to, and this is through my own trading journey, is that it comes down to really a few things that create successful traders. And that's one, you need a strategy that works. First and foremost, you need a strategy that works. There's plenty of strategies out there. You just got to find some that work. And there's plenty of strategies that do work. You got to, test them and back test them and make sure that, the signals you're taking are legit, and that over time with this strategy you'd be able to produce some profits. But then number two, I think even more important, is the risk management aspect of it. Is that in the strategy I use for trading, my win rate is only about 35 to 40%, and that's for me taking profits. So I'm hitting a lot of losses, but I'm still profitable because my winners are obviously a lot bigger than my losses. And so without that risk management in play, if you're losing 70% of the time, 65% of the time, well, if you don't have risk management, obviously your account goes down, down, down. And so that's probably the most important thing for me. It's like strategy, risk management, and then consistency, and emotions management. I think that's probably the biggest one, because your strategy and your risk management are great, and they'll do well for you as long as you can follow them. The thing about trading is that it's such a emotional and psychological game that a lot of people, I think that this is the point of where that statistic potentially comes from, is that people compromise their risk management and compromise their strategy due to emotions. Is that something that you would agree with?
Absolutely. I mean, emotions were probably the main reason why I blew so many accounts. First starting out trading, it's almost as if like when you buy into a stock, you buy the top, and then when you sell the stock, you sell the bottom.
Totally.
Right, and it's just because those institutions and big hedge funds are playing into the minds of all the retail traders. They know exactly what you're thinking. They know when you're going to buy, and they know when you're going to sell. So they do that on purpose. Or maybe it's not on purpose. Who knows? We don't really know. But I think that itself shows how easily the human mind is manipulable, and how maybe I'm not able to say it properly, but
I get what you're saying. Yeah. And I think that that's actually a really interesting point. It's one of the reasons I find trading so fascinating, because I'm a trader that uses technical analysis. I use basically zero fundamental signals to get into trades. However, I'm paying attention to the fundamentals of the greater macroeconomic,
or astrology for men.
Astrology for men.
I use technical analysis.
That's
align the stars out.
Totally.
There's a full moon, a blue moon, right?
Yes,
and we go along on the stock.
But the reason that technical analysis actually can work, though, is because it is socioeconomic psychology. It's the market psychology imprinted upon charts. And so like you were talking about, you buy the top, you sell the bottom, and it's like, why does this always happen to me? It sometimes feels like the market is out against you. Well, that's because the markets are a competitive place, right? So what the players in that space are trying to do, they're trying to think about where someone is buying or selling and trying to get on the other side of that, for to have a position. And so, that's sort of, collective psychology actually does play out in these markets. And that's why I find them so fascinating, because you can actually, the markets in a way are a map of human psychology, when, dealing with fear and greed, I would say.
Yeah, exactly. Yeah. It's just looking at a historical price chart, people can just say it's prices, but no, it's the humans.
Psychology.
It's psychology.
Yeah,
exactly. You can see exact levels or zones where people are more likely to sell the stock rather than buy the stock, and you can see exact levels or zones where people are more likely to buy the stock rather than selling it.
Exactly.
And if you see that historically happening, well, if a price comes down to a place where historically people have bought at that level, well, what's going to happen most likely, or what's going to be that's exactly what our edge is.
Right.
Exactly.
Right.
So
yeah, like for instance, yesterday, I was trading the NASDAQ futures, and it was volatile and choppy. And then once market opened, it had put in a low and it chopped around for about an hour, eventually came exactly down to that exact same low again, and picked up from there and rallied off. So, it's like these price points in the market are places where people are paying attention to, it's price data. So, I mean, maybe this is, a ode to astrology itself, saying that maybe there is some legitimacy to it. We don't know. But, there is a lot of technical analysis that, I think that the point of technical analysis is not that you know what's going to happen.
You make a good estimate.
You make a good estimate. And that's
you have
really
a plan of what you're going to do if it doesn't go in that direction.
Exactly. And that comes down to risk management. Yeah. So, that's really, I think, the hard thing that people have with trading and technical analysis is that there's no guarantees in the market whatsoever. It's just making a move based on probability and past price data. So enough about that. How would you describe your trading strategy?
So yeah, I look at supply and demand. I look at support and resistance. I don't use any indicators like RSI or MACD. I used to use them a lot, but not anymore, because I realized that they're not that great.
Yeah.
I mean, when you're back testing it using a bunch of data over the past 20 years, it doesn't really make any sense, because you get pretty much a 50-50 shot at using.
Yeah.
Exactly. So I stopped using indicators, except for moving averages. Okay. I like moving averages because it gives you dynamic areas of support and resistance.
So what are the indicator? I mean, what are the moving averages you're using, and then what either indicators or handicaps do you put on your chart to give you a better idea of where to enter in exit trades?
For moving averages, I use the 8, 21, 50, and 200.
Awesome.
So I keep those different colors on my chart so I know which one's which. And then I also, on a separate chart, sometimes if I'm trading SPY or the S&P 500, SPY, I'll keep tick on there. So that's just an internal indicator. It's not really an indicator. It just shows how the entire S&P 500 is doing. Mm-hmm. So I'll keep that on there as well. And then I'll also have, sometimes I'll have time and sales up there as well. Okay. So that's when I'm scalping or day trading.
Sure.
Just for seeing if there's momentum in the stock.
Yep.
I don't really necessarily use it that much, only in specific scenarios. Yeah.
Okay, interesting. And I heard you touch on, all these other indicators like RSI, MACD, and things like that. To my understanding, you actually go and back test these strategies yourself to see if they are profitable. How do you actually go about back testing?
Yeah, so what I did is I created a Python environment in this programming language, and then I coded up the indicator. You can always get it over an API, but sometimes these APIs are not that accurate. So I code up the indicators and I plot it just to make sure it lines up with the charts that I have on Thinkorswim. Mm-hmm. And then I just set conditions out there. So I set if statements like, well, what do I want to do if the RSI drops to 20? Okay, I want to buy. So then you test that out over the past 20 years. I tested it out for the past, for every single stock in the S&P 500 on every time frame for when the stock IPO'd. And I got pretty much a 50-50, a 50% success rate on the RSI itself. I tried the MACD, Keltner channels, Bollinger Bands, moving average crossovers. I've tried pretty much every indicator
like
you can think of. Common strategies.
Yeah.
But those success rates do change when you start to layer these indicators on top of each other, but it won't really go past 60%. 60% is where it really caps off of. I've even tried doing the volume profile, and that took almost months to figure out how to even create the volume profile indicator on Python itself. But most of these won't go past 65%.
Yeah.
So that really shows that all these indicators are not that great. I mean, it can give you a good idea, but it's not a good way of trading, especially if you're relying on them and if you're using them as like, okay, I'll buy when the RSI is 20. I'll buy when the slow moving average moves above the fast moving average or something like that, right?
Sure.
You can't rely on those. You have to have something else. It's almost as if it's an enhancer, not an actual way you can trade. It can't be a strategy.
Yeah, and that's I haven't back tested through Python like you have, but in my personal experience, that's what I've seen these indicators as, is that, I layer them on top of my strategy to give me greater conviction in my strategy. Exactly. So Goldman Sachs, I hope you're listening right now, 18 years old, profitable options trader, and is coding his own backtesting strategies and conditions. Pretty impressive stuff, quite honestly. I think that you have a bright future ahead of you. Anyone listening to this is why I wanted to do this podcast, and just to show show the world that there's people like you out there. It's pretty impressive, I must say. So with your option strategy, you've taught me a bit about the way that you trade options, and you're more of a momentum breakout trader, right?
Yeah.
And so you're looking for consolidation in the market where the volatility is squeezing,
contracts,
and then out of this contraction of volatility, you get a very volatile move,
right?
And you also layer on volume profile to look for kind of entries and exits,
right? Yeah.
So you're trying to just take the quick moves in and out of the market, just take a little bit from the market and be done with it.
Exactly. Yeah, that's exactly what I do. I mean, this morning I was looking at a couple stocks and the setup was there, and I saw some good consolidation over the past couple days, and then I took my entry on the breakout, and then I sold maybe a couple minutes later for a solid 30% profit, and I just do that rinse and repeat every day. And sometimes I'll zoom out on larger time frames and I'll take larger breakouts, but especially in this market, it's kind of hard to swing trade, so I just stuck to day trading, especially for the past couple months.
Totally.
But in a regular market, when we're not in a full-on bear market like we are right now, I'll be swing trading a little bit more than I day trade.
Yeah.
But that's just what I do.
So then how do you choose which options contract that you are interested in? So there's actually going to be a couple of questions here. Is that what stocks are you looking at? Do you scan for stocks? That'd be my first question. Or do you just have a basket of stocks that you look at on the regular? And then which options contract are you using? Are you looking at the Greeks? Are you measuring things like that? I know you're just day trading, so I'd like you to explain that a little bit.
So I don't use a scanner. I just trade the same stocks that I've been trading for the past couple years. So I just have a basket of stocks, like what you said, and every single day I'll just go through all of those at night and see the best looking setups, and then I'll take the trade the next day if it's there. And for specific option contracts, what I do is I look for open interest and volume. Primarily, that's really the only thing I look at, because I want to have fast entries. I want to be able to get in the stock fast, and I also want to make sure that the spread isn't too far apart. If it's too far apart, that might be eating away at my contracts and my profits, and especially when I go to sell, I might be taking a hit instead of an actual gain.
For sure.
Exactly.
Yeah, exactly. Yeah, I think that in options trading, the spread is really the most important aspect. Especially if you're marketing in, not limiting in on options or getting out. Especially if you're day trading, it's got to be quick.
Yeah.
So you want that spread to be very tight. So are you typically taking day of or week of expirations then at that point?
Yeah. So it's pretty much if it's a Monday, Tuesday, Wednesday, Thursday, I'll be taking that Friday expiration, and if it's Friday, I'll be taking that Friday expiration. It doesn't.
For sure.
I just love taking Friday expirations, especially, Yeah, especially on a Friday. I mean, 0 day till expirations are super risky, but if
they're fun.
They're fun, but making your trading fun is always dangerous.
It is actually. Yeah,
that's why I don't do it too much, but I still have fun with it.
Awesome. So that's interesting. So you have the same stocks. You're kind of looking at what are the time frames you're looking at.
Yeah.
Are you doing multiple time frame analysis?
Yeah. So every Sunday I'll do a daily and 4-hour time frame analysis, just looking at the general market, seeing what could happen. And then every day when I'm looking at stocks in the night for the next day, I'll be looking at the hourly mainly. So I found that to be the best time frame for me when I'm looking to trade the next day. And actually what's interesting is that it's not actually the hourly, it's the 65 minute, because each day has a specific amount of minutes, and when you have an hourly, you have a broken candle. So using 65 minutes actually encompasses all of the minutes in the trading day.
See, little tip and trick right there for all you traders out there.
So yeah, I use the 65-minute time frame instead of the hourly.
Cool. So then, if you're on your higher time frames, what are you looking for exactly? Are you looking for potential areas of support, resistance, supply and demand, where you could potentially running into? What's important about these higher time frames for you?
Yeah, so higher time frames for me always show more data, and more data means that it's been proven more, right? It's been there for more. Yeah, it's just more data. That's pretty much what it is. And if you have more data, then it obviously the pattern or whatever you're seeing is going to be more accurate. Right?
I see. Yeah.
Exactly. So using a higher time frame is super important. And on a higher time frame, let's say the daily chart, what I'll look for is what the current price is doing right now compared to what it's doing in the past. So if it's sitting at a area where the buyers are usually at, I'll look for a long position there. And if it's sitting at an area where sellers are usually at, I'll take a short position there. It's pretty simple. But also with these breakouts, I always encompass an extra kind of layer of protection. So if the stock does break above the area where sellers are most likely to be there, that's where I'll take my long position. And then same thing on the short side. Because I know what you do is usually just take these short and long positions, kind of just following the market, right? And you keep your stops right above where that zone is. That's where I take my longs.
Interesting.
Exactly.
So when I'm getting stopped out, you're getting long.
I'm getting long.
Yeah.
Exactly.
And maybe that's what I should do is, have a double order trigger there,
right.
Is that, get stopped out of my, because really what that's saying is that, I'm looking to play the existing momentum in the market. And really, I'm just a trend trader.
Yeah.
So I'm trading trends. And if momentum shifts, when I'm getting stopped out, you usually can get a nice little pop out of that. And so, I'm not looking for, it wouldn't be the same setup that I'm typically looking for my 3-to-1s or 5-to-1s of R to R, but for those stop outs, maybe a 1-to-1 or something like that.
Exactly. Yeah, that's fantastic. I mean, you should try doing that out one time.
That's actually really interesting. You got my mind mind running here now, actually. So, I don't want to be a revenge trader though.
Oh, for sure.
But, if you have a strategy, then, if you get stopped out of one way and get long the other way, then boom,
I mean, you can always just have 2 orders in right when it enters that zone.
You could.
And then let's say it breaks below that zone, just close out that long for a loss, and then if it breaks above that zone, then close out that short for a loss and just take the long.
Exactly. Yeah, that would be. We'll have to play around with that and see if that's possible. Well, thanks for joining me today, Aryan. Sure. We're about a half hour into this. This was a really interesting session.
Yeah, of course.
We will keep up with you and your trading. Is there any place on social media where people can follow you or anything like that?
Yeah, so I have a financial Instagram account called StockShare. If you guys want to check that out, go ahead.
Okay. Is it just StockShare, all lowercase?
StockShare_.
StockShare_ on Instagram.
I haven't posted in a while though, so I'll probably start doing that again.
Awesome. So StockShare_ on Instagram. Make sure to give Aryan a follow. He's a very talented young trader. Until next time, guys, we will see you later.